Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is January 5th, 2012 and we are currently looking at the price action on our 15-minute chart. And as you can see, for the past 2 days there's been massive weakness in the euro. We've been seeing a sell-off in the pair due to fears over European sovereign debt and over some issues dealing with the banks in Europe on funding issues and recapitalization issues. So then, of course, this is what's primarily driving the market. And of course, for today, we saw the pair fall 173 pips to a new low, a fresh low at 27.70, which is now serving as support for us. But this move today and even for the past 2 days has been a result of euro weakness. And although we're seeing the dollar strengthen in this pair, this is more of a story about euro weakness because the euro has been falling across multiple euro crosses like the euro CAD, the euro Aussie, and the euro yen. So then this story is primarily about euro weakness and concerns over eurozone debt in particular. Now let me go to the 5-minute chart so I can zoom in on price action for today. Now if you glance back towards our Asian trading session, you can see that it was trading pretty range bound. It was consolidating for a period of time, and it was range bound trading between two Fibonacci levels. Our 23.6% level at 29.10 served as support, and our 38.6% level at 29.42 served as resistance. And from what price action is showing us, the pair was having a hard time breaking these levels, and in particular breaking this resistance at 38.6%, the Fibonacci level, which would be 29.42 area. But let me show you where I got these levels from. If I was to go to the 1-hour chart, you can see that these fib levels was actually created from the drop last week that formed the new 2011 low here at 28.57, and it came like the Fibonacci levels were drawn from the high here at 30.80 down to the low at 28.58. So then this 23.6% level and the 38.6% retracement levels formed the range during today's Asian trading session. Now let me go back to our 5-minute chart. So as you can see, it's been bouncing within this range, held tightly within this range. But if you look closely, right around the London Open, you can see that price was sitting on this 38.6 Fibonacci retracement level. And this was around the London Open, and normally around the London Open you see a flood of orders come into the market. So then we saw this flood of sell orders come into the market, and if you were more of an aggressive trader at this time, then you could have played this range and placed a short order or sell order at this resistance at 29.42 and closed out at the 23.6% level for a 30 pip trade. Or what you could have done, you could have placed your short here and held out onto it. If you were a little bit more riskier, you could have held out onto it and closed it actually at last year's low at 28.58 for about an 80 pip trade. So then that's what you could have done earlier if you were looking at your chart during that time. But if you wanted to re-enter later on in the day, or if you weren't up at that time, you had an opportunity to re-enter the market following the ADP numbers and our unemployment claims numbers. Now, if you look closely, you can see that there was resistance forming around a 28.47 level. Let me draw a horizontal line at this 28.47 level. And if you look back, you can see that price attempted to break through this level, but it couldn't. And over here, of course, on this drop, it served as support. So then this proves to us that this is a common area of support and resistance. So then let me go to our 1-minute chart. Let me glance back here. Now, on our 1-minute chart, following the ADP employment numbers, you could have entered, if you were an aggressive trader, you could have entered following the report of that number and placed a short order or sell order near this area of resistance and held out onto it until it reached close to this psychological support at 2800. Of course, it stopped 3 pips above that psychological support, but you could have actually closed your trade out around this zone of psychological support for about a 40 pip trade, or you could have entered in right after the unemployment claims numbers came out at this same resistance at 2847 and actually sold the pair and closed out your trade at this psychological support for about a 40 pip trade as well. So these could have been 2 entries you could have placed in the market. But you could have actually, if you wanted to, you could have closed out your trade here at the psychological support, or you could have held out onto your trade. Let me go back to the 5-minute chart. And you could have closed out your trade when the market calmed down prior to the New York closing bell, when price was around 27.87 for about a 53 pip trade. So you could have done it. You could have closed out at psychological support, or you could have closed out when the market began to calm down prior to the New York closing bell. So then, of course, right now we're seeing that the market is consolidating above this support at 2770, and I believe it's going to be range bound until the non-farms payroll report. Of course, normally ahead of the non-farms payroll report, we see light volume in the market, so I'm expecting there to be light volume in the Asian session for today. But that's all that I have for you for the technical analysis review for today, and of course I will talk to you later. Okay, have a good day. Okay, then, bye.